Capital raising can feel like speed dating with millionaires. One awkward misstep and you're ghosted forever. But what if you had a playbook that helped accredited investors choose you? On today's episode, we'll uncover the best strategies to turn lukewarm prospects into committed LPs. Next. Raising capital is no small feat. You've heard me say that before, but if you can create an offer that is compelling to accredited investors, it becomes much easier to attract them. On today's episode, my guest and I will discuss just this: how to raise capital from accredited investors. Welcome to Fund Playbook. This is a show that's all about how to launch and raise capital for your very own private fund or real estate syndication. And we go live every Thursday at 3 p.m. Eastern Time. Just hit that subscribe button to follow the show. I'm Jimmy Atkinson. I'm joined today by a special guest, Angela Hwang of RevGen Consulting. Angela, how do you raise capital from accredited investors?
That is the question, and thank you so much for having me. So I think that you kind of have to start with the basics, right? A lot of people just think, okay, we're just gonna spend a lot of money on advertising and just get just do a bunch of ads and get our name out there, and then, the capital will come. I do think that you have to be more strategic. You have to take a step back and think about, all right, so what type, of investors are you looking for? When we talk about accredited investors, we're talking about, more than 24 million and counting, actually, accredited investors that are currently in the States alone. And, you're thinking, okay, well, are we going after all of them? Or, are you looking for specific types of investors and personas? So I think you just have to really take a step back and think about, what types of investors you're looking for. Is it by location? Is it by, certain demographics or industry and so forth? And think about how you want to allocate your resources and your budget. So that's kind of the short answer, but I think there's a lot of complexities with it.
That's what I wanted. It was just the short answer. We'll be diving in over the course of today's episode. And by the way, for those joining us live, if you have questions about starting your own fund or raising capital, particularly if you're raising capital from accredited investors, you're going direct to investors, we'd love to hear your questions or comments. Please feel free to use the live chat. We'll get to as many of those questions throughout today's episode as we can. But Angela, just to start us off, a lot of people who may be new to this whole arena of launching a fund and putting together their capital stack and raising some equity from investors to move their deal forward, sometimes they just don't even know how to get started. They're overwhelmed by all of the different things they have to do. In addition to finding a deal or putting together a portfolio of deals, they have to make sure that their deal or fund is structured correctly. They have to put their team together. They have to put legal together. They have to get their accounting straightened out. They got to put their fund management team or software in place. There's a lot to do. And then there's marketing, which is like a whole other thing, basically, that sometimes gets left by the wayside, unfortunately. But for those who are savvy enough to know that marketing deserves a real prominent place within their team or within their overall company, their firm, what's the best way just to get started with marketing a private fund or real estate deal?
And I think that's an excellent point. I do see that a lot of first-time sponsors, the funds that are, ready to market directly to accredited investors, they do, budget for all of this, right? Operations, legal, the structure, which is really, really important, and so forth, just like you said. And then the last thing they think about is marketing. So oftentimes, I would hear from sponsors about, we have to put a deck together. We need some marketing materials. We need, X, Y, Z. And then they realize that not only do they not have the resources, but they haven't properly set aside a budget for that. So here's what I would say. Instead of going out and thinking about, okay, I need to build a team. I need to hire a bunch of people and do, everything that everybody is doing. I think you need to really speak to, some marketing generalists, strategists, talk to, a few experts in the field and help them just figure out, okay, where do we get started? Obviously there's the investor deck, there's all these like basic materials, but what is your capital raising goal? And you need to speak to someone who really understands all aspects of that rather than, okay, we're just gonna do some PR, we're just gonna do some ads. It's best to just kind of start with that, and that expert can help you figure out, all right, so what are some key milestones over the next 3 months, 6 months, and what is the budget? And they can also help you figure that out as well. Maybe you don't know what you should be spending, and the budget really depends on, how quickly you want to raise money. Obviously, the more money you spend, typically you will get a lot of leads. But I do want to kind of, take a look at, to talk about that a little later in detail, because just because you get a lot of leads, that doesn't mean that they're necessarily the right leads. And that's where a lot of sponsors kind of fall short, I would say. But again, I think the first thing to start is talk to a lot of marketing experts, consultants, heads of marketing, and just pick the brain. And, as marketers, we love to talk. So I think you're not going to have issues finding the right people and, just really help them guide you.
And I would say talk to Angela. Maybe it might be a first call you can make. And so that brings me to my next question, Angela, which is, who is Angela Hwang? Can you tell us a little bit about yourself and about RevGen Consulting? How did you get to where you are at this point in your career today?
Yeah, absolutely. So I started, RevGen Consulting about a couple of years ago because real estate has always been an industry that I ended up coming back to. And I say that because when I started my marketing career, I started in legal marketing, and the practice groups that I always supported were real estate and private funds, funny enough. So I always, was around real estate experts, attorneys, and so forth. And I spent about a decade doing that. And then I worked for a brokerage firm called Colliers International, and just really working with commercial brokers on their marketing and business development. And then I just kind of took a step, away and worked for some tech startups. It was very fast paced. It was great, but my passion has always been real estate. So I came back to the industry about 5-6 years ago, and I was the head of marketing for a couple of really great real estate fund managers, one based in San Jose and the other in the East Coast. And I wanted to, after having been in house and having a great team of people to work with and manage, I realized that there's not a lot of marketing consultants or like fractional CMO types of experts in the field right now that can really help guide the fund managers. And I really wanted to provide that for people because I think that there's a lot of passion in this industry. There's a lot of stake. And I think that one misstep, you can end up wasting a lot of money. And I'm a firm believer that you don't have to spend a ton of money to get the results. You just have to have the right strategy in place and the right plan. And that's what I wanted to deliver. So for RevGen Consulting, it's not really a marketing agency that I established. It's more of a business development. So, I help guide my clients with the marketing strategy, but also ultimately my success would be that I help clients raise the capital that they need.
And in your storied past, leading up to this point, can you maybe share one detail about a milestone deal or fund that you helped capitalize, and how much money have you helped to raise in that deal?
Yeah, so I'm very proud, and if I can mention, a couple of names or
Please
so
do.
forth, you can see this on my LinkedIn. I'm just really happy that I got to be the head of marketing for Urban Catalyst. They're a very successful a fund manager based in San Jose, California, and I was actually their very first director of marketing, and I built a really great team, and they're all still there, which and I'm seeing the great work that they're doing. But together, in 2020 to 2022, we helped raise more than 150, almost 200,000, $200 million dollars from accredited investors, and I'm extremely proud of that because we started out just running ads, and we realized, okay, that's going to be really it's not going to be cost effective. So let's, really think about the omni-channel approach. Besides the ads, how do we, ramp up our PR efforts? How do we build more organic content? How do we make sure that, people are seeing educational content from us on a consistent basis? And how do we build external partnership? And that's where we met, Jimmy. I remember you were one of our, successful external partners that we built a relationship with. And I think that's really, really important. And just, being visible on many channels where investors can find you, but also being a thought leader. So I'm very proud that, I was there. And yeah, it's been really great.
And full disclosure, Urban Catalyst is still a client of mine. We have a partnership that's extended through the end of this year still. So looking forward to continuing that relationship with them, and all because of you, Angela. So thanks for that initial intro way back when, about 5 years ago now. That was a long time ago. I've got more questions, but we've gotten a lot of comments in from the audience, so I wanted to display some of them. This one here from Tommy D, who we both know, Angela. I'm working forward to working with RevGen. Thanks, Tommy. And then he asks a follow-up question. What is the best position for us to get started? And then what are some grassroots efforts we can do to get the word out? We had a similar question here from Nazan, excuse me. What is the best way to get leads? So maybe we can scrap the planned questions I had for a couple more minutes here, and let's attack this question that we've gotten from these two viewers. Grassroots efforts to get the word out. Best way to get leads. How do you get started generating leads and getting the word out about your investment product?
So that's like the $1 million question, right? So you can, okay, so I've seen a lot of, fund managers do it very differently. But from my experience, here's what I've seen that works. First, a lot of people make the mistake of buying leads, or they think they can buy like leads, credit investor leads. And there's a lot of companies out there that are going to be pitching the services. I have yet to see success from that. I think buying lists will help you, feel as though you're building your database, but not sure if that's truly the types, the quality leads that you're looking for. So I would say the grassroots, which I believe in, that organic, is start building out your content strategy. I think that you have to really establish yourself as a thought leader and share your expertise and everything that's related to building the types of projects that you're building. So for example, if you're building a multifamily project, tell me about your experience, what you've seen, what's going on in the market. And share your thoughts in a blog post, white paper, video, a webinar, and offer that content, for free to the investors, and get yourself out there. Get yourself on YouTube and LinkedIn, and how we're sharing our insights right now. I think that's really important, and that's the inbound marketing. And one thing that I do want to be transparent with is the fact that it does take time. So you just have to be really patient. I think that oftentimes you get really attracted to, a lot of marketers will say, oh, we'll get you those leads. Oh, you just, pay us this amount, we'll get you the leads. But I've seen that maybe, you may be getting hundreds of leads and this and that, but they're not quality leads. And I always tell my clients it's about the quality of the leads, not necessarily getting 500, 1,000 leads a month, because those leads, sometimes you can go through like the affiliate network and all of that. And I've just seen a lot of, money getting wasted. So organic content, I would say that's like the number one way to build that trust and just get, as valuable insights out there and thought leadership out there. And that's the best way. And also make sure that your website and your marketing materials and everything's aligned. So the messaging that, you're putting in your content, make sure that how you're, communicating your value and your company and your fund, that matches what you have on the website. Oftentimes, surprisingly, I see that it doesn't align. So, you may be saying one thing, and then you're describing your company one way, and then you go to the website and you go, oh, that's not what you said in that article. You know what I mean? So
I've seen that. I've seen that before. Yeah. Mm-hmm. And if I can offer just some of my suggestions for a minute, I've been developing different lead gen businesses essentially since I was in college. I started my first business when I was in college. So I have over 20 years of lead gen experience at this point. And what I have found is the best way to get started is to write one lead magnet and then start running some traffic to it. So, and I'll give you a very concrete example of how we've used this strategy to build our email list at opportunityzones.com to over 20,000 opt-in subscribers, all just inbound marketing. We wrote a comprehensive guide called The Beginner's Guide to Opportunity Zone Investing. And then it gets quite a bit of organic search traffic because we're fairly good at SEO, but that's not an overnight thing. If you want something to happen overnight, pay for traffic. Pay for traffic on LinkedIn, on Facebook, and on Google. Depending on which industry you're in, what your lead magnet is, the type of audience you're trying to collect, you might have different success in different channels. For us, our number one best channel has been Google paid search. So we're spending some amount of money per month to run traffic to that landing page that offers that lead magnet. And what we do is we require them to give their name and email address in order to receive the guide. And then they're on our email list, and we're able to nurture that audience over a long period of time. And then we don't even have a fund, right? We like to showcase other people's private equity real estate deals and multi-asset funds, such as the aforementioned Urban Catalyst. But it's a great way to get in front of the right audience immediately, start to build up that audience over time, and you can nurture that audience over the course of many days, weeks, months, and in our case, over the past 6 years is when we started this strategy. So it's a really good strategy to get started. Write a lead magnet, run some traffic to the landing page. I think it's that simple. That's one. There's a lot of different strategies out there. Angela has a lot of great tips. That's just one that I'll offer. I wanted to see if we had any more action in the chat here. Go ahead, Angela. Yes, please.
I think I love that, you had a piece of content, right? You had value-added content that you were driving traffic to. Mm-hmm. And I think that's key when running paid campaigns. So I know I almost sound a little, I have like a negative sense on paid ads, and that's not, I want to kind of clarify that. I'm not saying paid ads are a no-go. It's more that you have to run campaigns, but give them something. So it's like if you're, putting some money on paid ads, but driving them to valuable content, like a very good thought leadership piece or something, I think that's well worth it.
It's different. It's totally different than just buying leads.
Yes, that's correct.
It's buying traffic and turning them into leads once they see the value that you're offering. There's a fine difference there, but the difference is huge, I think.
Yes, like them opting in, them coming to you, that is the quality lead because they are seeking this type of information. They're Googling, they're doing their research, and then they found, the information that they've been searching, and then they're opting in and now trusting you to provide them the knowledge to, move forward. And I think that's really important. I think buying leads and just, running a bunch of like campaigns without any content behind it, I think that's where it gets a little dangerous. And those are the types of metrics that you want to stay away from, I would say.
We've got quite a few questions in the chat. I'm going to hold some of them toward the end of the show, but I did just get this one in from Gretchen that kind of feeds in nicely to the next topic that I wanted to talk with you about, Angela, one of my favorite topics, which is securities law. So Gretchen asks, what is the best way to get more leads and market within guidelines of 506D offerings? So Gretchen has a bit of a typo here in there is no such thing as 506D, but here's what does exist. There's a Reg D offering, and then within that Reg D offering, there's two different rules from which a fund who's filing that exemption can choose from. One of them is 506B, as in Bravo, and the other is 506C, as in Charlie. There we go. I didn't think I'd get to use my phonetic alphabet today, but 506 Charlie and 506 Bravo. And depending on which rule you decide to file your exemption under, there's much different. There's a lot of different. The rules are much different. Suffice it to say, 506C is absolutely the way that you want to go if you want to market directly to accredited investors. But Angela, I see fund managers, real estate developers, even some attorneys get tripped up by this terminology and the differences between a B and a C all the time under this Reg D. What's your high level 30,000 foot view overview of the difference between the two and how you like to advise your clients if they're considering one or the other?
Sure. So I'll put it in a very simple way since I'm not a securities attorney. But as from a marketing perspective, 506C gives you a lot more freedom to be able to advertise and market your offerings a little bit more freely than 506B. But 506C, you have the ability to, discuss your offerings and market and advertise to get the accredited investors, whereas 506B is a bit limited. So I typically like to guide 506C. I would say the 506C structure is preferred when it comes to really being able to market your fund more widely, and I would say that more extensively. But one thing that I would note is just because your fund is structured as a 506C doesn't mean that you can say whatever you want. You still cannot make definitive statements. You still have to follow the SEC guidelines and so forth. And one tip that I would give to all the marketers is potentially is your best friend. Potentially just do not make any definitive, statements. Do not say this is the best in the whole world or anything like that. I think you'll be okay. But I would say 506C is definitely the structure that I would recommend.
Yeah, if you already have a large network of pre-existing relationships and you don't want to have to verify the accredited investor status of all of your investors, and you're working through a broker-dealer or RIA network, I think 506B might be a better option for you. But for those of you who want to perform what the SEC refers to as general solicitation, or what to normal people like us would refer to as advertising and marketing, you want to make sure that you file as 506C. And just to kind of pile on here, I did get a question from my good friend Kirk. How are you doing, Kirk? He asked, can you talk about what to be aware of in your advertising with respect to securities regulation? So I think we've covered this a little bit, Kirk, but to Angela's point, you don't want the safe harbor that Reg D offers for sponsors of different investment products does not cover fraud. It covers the ability to perform advertising under Rule 506C, but it doesn't cover against fraud. So you don't want to say anything fraudulent. You also don't want to say anything definitive with respect to any of your returns. I would never advise a client of mine, I'm sure Angela would never advise a client of hers, to put somewhere in their marketing language or on their website or in their pitch deck, guaranteed 12% pref or something like that. You know what I mean? Like, a lot of the figures are projected. They're based on forward-looking assumptions that are not guaranteed. Past performance is not necessarily indicative of future results. You want all that type of language in there. And without devolving into a course on securities law, I would just probably pause the conversation here now and refer you to some of our other videos that we have on Fund Playbook. I recently did an interview with Andrew Daup on securities law and how some funds get into trouble sometimes. And we also have a breakdown of 506C versus 506B in our YouTube video library at Fund Playbook. So go look for those videos. It'll give you a lot more detail into these issues. But let's see. We had another question that came in here I wanted to get to also from Luke, Angela, and I was able to read it, so I have my answer ready to go, but I want to put you on the spot and get your answer first. He says, as a young real estate professional that is looking to raise for a couple of years, not looking to raise for a couple of years, what should I be doing right now that will help me raise capital in the future? This is from Luke, and thanks for the question, Luke. Angela?
So look, I think you have a fantastic opportunity here. So I think that you have a great opportunity to market to emerging generations or future generations of accredited investors. And you want to just kind of, take a look at how they behave and how they source, their investment opportunities. And the fact that, you're concerned about, okay, am I just too young and inexperienced? I think use it to your advantage. You have, let's say that you're looking to raise capital 2 years from now. Start building your profile online. Start publishing articles on LinkedIn. Start your YouTube, channel and create videos. And look at what's trending. There's a lot of tools out there that tell you what topics are trending and what people are learning. And and just do your research and see what types of articles are gaining traction and so forth. And just start building your content. 2 years is plenty of time for you to do that and build your profile, start, YouTube shorts and TikTok and so forth. And I know TikTok almost sounds ridiculous in this space, but surprisingly, personal finance, real estate are the trending topics. They're one of the most searched topics. And, one thing that I always talk about too with the clients is that, I think, Jimmy, you brought up a really good point about certain funds may benefit from 506B structure because they have those established relationships. But for new sponsors and emerging sponsors, as a 506C, you have this almost unlimited opportunities, tremendous opportunities where you can market in a very creative way to up and coming accredited investors. And how I talked about there's 24 million accredited investors out there currently, but with the millennials and Gen Z coming up, and them working in tech and all these other fields where they are able to meet the criteria as an accredited investors, there's opportunity there to really resonate with them. And I think the way that they look for investment opportunities and the way that they learn and consume is going to be very different. They would prefer short videos, and they do a lot of their own research. So make sure that you are present. Your online presence is really strong. And I would really see this not as a disadvantage, but a tremendous opportunity. I mean, you have the time, you have you have all these, tools that are essentially free for you to just like start building.
And it's a great question, Luke, and I think you're thinking about it exactly the right way. Like, and he mentions in another comment down the thread that he's only 24 years old, and I think you're thinking about it exactly the right way. Like, you shouldn't even try to raise capital right now. But first of all, I totally agree with everything Angela said. Build your online presence. Start writing papers, reports, blog posts, YouTube content, podcasts. You don't have to do all of that, but maybe pick one or two channels that you enjoy doing. Build your profile on LinkedIn or X, and pick one or two of those things and just execute it at 110% for 2 years, and you'll be surprised how much traction you have. I would say add to that, just build an email list if you can. I really love that's the marketing channel that's worked really well for me, is building my email list within the opportunity zone space over the last 6 years. It's done wonders for my business. In addition to that, in addition to all the great marketing suggestions that Angela mentioned to build your online profile, I would say build a track record. Build a track record within whatever real estate sector that you want to raise capital in. So if you want to raise capital for an industrial project at some point 2 years plus down the line, do a deal. Do an industrial deal if you can, or at least participate in some way as a GP on a deal. Maybe you don't have to execute everything soup to nuts, but maybe you're one of the executives on a deal, or you're one of the JV partners on a deal. Maybe you're bringing in a little bit of capital into the deal, and you're learning the ropes basically. That's one example. Maybe you're housing, multifamily workforce housing. Maybe you're retail. Do something. Get some skin in the game and start building a track record of actually executing a deal, however small or large your participation can be. Do something, even if it seems really small today. You can kind of build on that over time, and at least 2 years from now, you'll be able to look back and say, hey, I participated in this deal at this level, and I did X, Y, and Z as a GP in this deal. So Luke, great question. Thanks. That was a great discussion we had right there. Feel free to ask any other questions if you have any follow-up. Did want to just put in Tommy D's comment with regards to Luke's question. He says, hey, get affiliated with old guys like me who have the experience. Enthusiasm has no age limit, Luke. Don't let your experience dictate your expectations. I think that's good advice, Tommy. So that's kind of, to my point, if you can get involved in some way on the GP side of the deal and you're actually managing an active deal, maybe partner up with somebody like Tommy D or somebody a bit older who might have experience in the need for somebody like you. So let's see what else we have here. Kirk's got a good tactical question. I want to get to Kirk's question here. He just submitted this a minute ago. What tech solutions do you use to manage and track your email list or web domain or posts? So I've got my tech stack that I like to use. Angela, I want to turn to you first, though. What do you like to use? What tools do you like to use, your tech solutions?
So my two favorites for email marketing and list like a database build and just segmentation and all of them are HubSpot and MailChimp. I would say that HubSpot is great, but it can get a little bit more costly. I've seen that MailChimp does a really great job Maybe not, it doesn't have all the bells and whistles, but you may not actually need that. I think it does exactly what it's supposed to do. So again, I like to advise my clients to not just spend, the most amount of money you can spend to get everything. Let's just kind of start small and see, okay, I just want to start sending out some emails and, get leads. Then I think MailChimp is a really great tool to get started.
And what about web domain or posts, like actually making the website, I think is what Kirk is getting at right there.
Yes. So I would say Wix and Squarespace are really fantastic tools. They're essentially free, super easy. They have fantastic templates that you can use, and you can manage it. There's really no hard coding involved or anything like that. So I would say Wix and Squarespace are definitely the go-to. I've seen people do HubSpot, which is great. And if you decide to get HubSpot, then I think you can build your website and everything will be under that. But I'm a fan of Squarespace, I have to say. That's my favorite.
Good. I have never used Wix or Squarespace. I am a WordPress nerd to a fault. So I would I would actually say, you might want to listen to Angela, not me, because I'm kind of I've just gotten stuck with WordPress because I've been using it for so long. But I do like WordPress quite a bit as a solution for actually creating a website and being able to post to a website. In terms of email list, I think Angela hit the two big ones that I like a lot. HubSpot is a great solution. It's an enterprise level solution, quite frankly, and small businesses use it all the time as well. It does have a lot of bells and whistles, though. I actually haven't used it personally in quite some time. I run all my stuff on MailChimp because I like to keep things simple, and there's just two of us over here, so we can't really, and I'm the only one who ever does any of the email marketing stuff and actually ever opens it up. So I don't have a huge team that I have to pass different leads off to. It's just me. Everything comes through me pretty much. So for me and my purposes, really small, starting off, MailChimp is plenty for me. But if you have a larger team or you want some more bells and whistles, definitely HubSpot. I've heard a lot of good things about Beehive as well. I've seen them around a lot more lately within the last year, but I haven't checked them out. But that might be another one that's worth looking into. Did get another question. Well, comment here first from Luke says, thank you so much. Thank you, Luke, for the great question and for coming today. Appreciate it. Nazan asks, how about non-real estate funds? That's a great question. I think a lot of what we've discussed in terms of, the securities law aspect of it, Reg D 506B versus Reg D 506C, that applies also to non-real estate funds. I think a lot of what we've discussed about generating leads, writing a lead magnet, inbound marketing, the tech solutions we just discussed, that also can apply to non-real estate funds. But Angela, I don't know if you've worked with any non-real estate funds or if you have any advice in general for Nazan with regards to this question from this person.
Yeah, absolutely. And Jimmy's right. A lot of the best practices when it comes to marketing do apply, whether or not they're real estate funds versus non-real estate funds. And I've consulted, for venture funds, actually. So, the venture funds that work with different startups to build the products and so forth. And interestingly, a lot of the things that, I've done for real estate funds really apply. Again, the content. I know I keep talking about content, but I think that's extremely important. Just getting the principals to just post as much content as possible and just really finding where, your prospects, where they consume the news and how they get the information. That's really important. And I would say maybe the tech stack might be a little different. I think MailChimp, HubSpot, that completely applies. But, for example, like real estate funds will use, Juniper Square and others to manage their investors once they start getting, once they start raising money. And I've seen a couple of venture funds use AngelList. I know in the tech world, that's where like a lot of startups will post about, like they post their jobs and information, but they also have a platform that help, venture funds, like non-real estate funds that are in the $5 to $10 million range, manage their funds. So that's something actually that you may want to take a look at. But ultimately, you are communicating your value. You're communicating your offering, your services, and your products to investors to invest and really believe in your vision. So, let them get to know who you are. One thing that I do want to point out is And I think about Luke's question about not having the track record and so forth, and Jimmy's, guidance on how to build that team. Investors want to invest in the team members and the people that they trust to build that trust. Be transparent, and the team page is by far one of the most popular pages on any fund manager's websites. That's been very consistent. That's something that I've seen across so many different companies where people want to see who they're working with, who they're investing in. So that's really important. And, just again, they want to know that you know what's going on in the industry. You're not just constantly trying to sell, but that you're saying, hey, here's what's going on with the market right now. And here are my 2 cents, and I would love to see what you think. And also, schedule consultations, just have a chat about, what are your investment needs? And, are we aligned on this? And, how would you like to get the news? Ask them a lot of questions. It doesn't have to be, let me sell you on this, let me tell you about this and that. Let's just ask questions. So I think that's where you can add a lot of value.
No, that's great, Angela. And if I can just get on my soapbox for a minute, you know what I hate more than almost anything else is when I go to a website and it's just all stock photos and very basic generic language, and I go to the about page and there are not even any profiles on the team members. I want to know who you are, and to the extent that you're comfortable sharing your photograph of yourself on the internet, and it seems like pretty much everybody is these days, get your headshot on there. I want to see what you look like, and I want to see that smiling face, and I want to just read a little bit of a blurb about you and what your track record is. I think that's exactly right. Angela,
Right.
we're running low on time here. I do want to cut everybody loose here in a few more minutes, but I did get a couple questions via email that I wanted to get to, and we also got a very similar question in the chat, so I'm going to read both these questions. This one is, how much money should I allocate to my marketing budget? And then we got this one in live just moments ago from Audio Skills, who's one of our favorite followers. Seems to be at a lot of our events and live streams, is I've had a lot of success with my own multifamily investing, and I'm thinking about scaling into a fund. What kind of marketing budget should I think about to raise $5 to $10 million in private capital? So, Angela, how do you advise people when they ask you, how much money should I allocate to marketing?
So I can give you the ballpark figure based on my own experience and also what I've heard from other marketing professionals and industry standards, versus what I would recommend. So the general kind of rule of thumb is, if you want to scale quickly and you have limited amount of time to raise that capital, I would say be a little aggressive, and you're looking at anywhere between 6 to 10% of your fundraising goal, and that should be spent on marketing. And but if you have more time and you want to grow a little bit more organically, and you can be a bit, I guess, more patient, and just kind of do a lot of the groundwork, I would say 3 to 5% even on a conservative side. That's also doable. But again, I'm a firm believer that there's really no one solution that fits everybody. And that's where, I think having the right marketing person or, marketing team can help you, put a budget together for you. So I think that's where, having that conversation and having the consultation is really, really important. And I would definitely advise that if anyone promises you to get a lot of leads and, get you, X amount of money raised in 3 months, like, I would say stay away. So this is a long game. Just work with them, help them strategize, and let's, help them, have them work with you and figure that out. But I would say anywhere from 3 to 5%, very, very conservative end, to 6 to 10%. I've seen some spend as much as 20%, but I'm not really sure about that. So I think that's a good range to work with.
6 to 10% seems very high to me, unless you need it done right away, and then that's gonna be very costly. I like your 3 to 5 range, seems reasonable to me. So for a $10 million raise for this particular individual, Audio Skills here, we're looking at, what is that, $300,000 to $500,000 marketing budget over the lifetime of the raise. So that might take, I guess, a follow-up question, how long should it take to raise $10 million? And I guess it depends, right? It depends on your track record. It depends on the deal. It depends on your relationships. But, maybe it might take an experienced operator who's got a huge Rolodex a week. It might take an emerging fund manager a year or more to raise that much capital if they're starting from nothing. So just something to bear in mind. Did get just a couple more thoughts here that I wanted to get to. Let's see. This is from user Daup AP, which I'm guessing is Andrew Daup, which is one of our favorites. So I'm going to assume this is Andrew. If it's not, please correct me. But Andrew says, two of the brightest marketing minds in the private investment industry. Thank you, Andrew. Is there an amount or percentage of an equity round that an entrepreneur should budget for an effective capital raising campaign? Okay, so we already answered that question. Sorry, I'm looking at these in real time. So let me see. He had one follow up also that I wanted to get to. Okay, here's the follow up. Also, Also, is that expense reimbursable to the entrepreneur out of investor capital? I don't know the answer to that one.
Oh, that's an interesting question. I don't have an answer for you on that either.
I think that would be a question for an attorney like you, Andrew. I actually don't know the answer to that question. And I think it would depend on what the operating agreement of the fund actually says. I think that would be my best guess. But Andrew, thanks for stumping me today. That was pleasant.
Thank you. That's great.
Angela, we're wrapping up. We're almost out of time. Do you have any last thoughts? And by the way, this has been, I think, our most successful episode to date in terms of the amount of engagement that we've gotten from our audience. So, and I feel like we only just barely scratched the surface. So I definitely want to have you back on again really soon. Alicia asked, do you recommend a PPM? Absolutely, I do. That is crucial. We'll talk more about that on future episodes. And then Andrew Daup, general solicitation, reporting for duty, sir. Thanks, Andrew, for that. That's a dad joke. General solicitation, very funny. Angela, final thoughts from you, or before we wrap it up?
No, I mean, this was really great. Thank you for all the questions. And, if you have any follow-up questions, please let us know. And just, you get the right person, the right team in place, and, you're on your way to success.
And what's the best way to reach out to you if anybody's interested in learning more about you or your services that you offer at RevGen Consulting?
Sure. So you can reach out to me by visiting revgenconsultancy.com or angela@revgenconsultancy.com.
Perfect.
Or you can find me on LinkedIn as well.
She is on LinkedIn, so hard to miss her. Angela, this has been awesome. We're out of time, but thanks for joining me today. Now, our next episode and live stream will be on YouTube next Thursday at 3 p.m. Eastern Time. You're invited to attend the live stream on YouTube and ask your questions about starting a fund or real estate syndication so that we can answer your questions in real time. And I want to have Angela back on again very soon. That was awesome. Please be sure to subscribe to us on YouTube. And if you enjoyed today's episode, hit that like button, give us a thumbs up. By the way, Fund Playbook is now also available on Apple Podcasts and Spotify. Just search for Fund Playbook on the app or visit fundplaybook.com and just click that Apple or Spotify button right there on the top of the page. Thanks for watching and listening. We'll be back next week with another episode.